All right, 10:30 on the money. Let's go ahead and get this started. Everyone who's joined us, thank you for being here for this 30-minute end of the quarter webinar. We're going to be covering the top 5 wage and hour mistakes today. And before we get started, I want to do a quick introduction for Jordan Bogart, who's going to be telling us just a little bit about Eddie. Eddie is an incredible HR company. I've gotten to know Jordan over the last little while, learning about what his company does. They're fantastic. They really focus on small businesses like a lot of you are and a lot of the clients that we work on serving here. So I want to turn the time over to Jordan just for a few minutes to tell us a little bit about Eddie and what you guys do and what kind of services you provide. So Jordan, you want to take it away?
Yes, thank you so much, Spencer. I really appreciate it. Again, Jordan Bogart, I've been in the payroll and HR space for a long time, and I've kind of dedicated my time in this space to the small to mid-sized clients. I brought on thousands of clients, worked at ADP, Heartland, started my own payroll and HR company, and then merged with Eddie almost 3 years ago. The reason I joined Eddie is because of their vision and what they're trying to accomplish. Usually you have to go to a big system like Workday or Namely or Kronos, whatever it may be, to be able to get an all-in-one suite with like an applicant tracking, onboarding, time and attendance, payroll, everything. We've created that for a small business that's super simple to use, but also very robust. Like, for example, our applicant tracking system, we're integrated with over 25,000 job boards. So not just your standard Indeed, ZipRecruiter, you can go deep and go into like KSL.com, classifieds, job boards at schools. And we can really kind of take you to that next level, all at a very affordable price for those kind of smaller businesses. We've been in the industry for just over 5 years, but we spent kind of the first 3 years building out the product. And now that we're full deep into it, we've got almost 1,000 clients and things are going really well. But our biggest thing is customer service and making it really easy for you to use. So we give you a single point of contact that you can call, text, or email. And again, we can help you all the way from hire to fire. But excited to partner up with Employer Lawyer and be of service to you guys. So if there's any questions, let me know. But if not, I'll turn the time back over to Spencer. So
awesome. Appreciate that, Jordan. Thank you. One thing, guys, that Jordan did not mention is that in their focus on small businesses, the way that they work is it really depends on how many employees you have. So it's really customizable. It really fits the needs that the businesses have based on their size and their employee count, which I think is fantastic. It doesn't matter if you've got 2 employees or 50 employees or something else. So they're just a really good fit that way. I will be sending out a document that has additional information about Eddie, along with Jordan's contact information, and would be available to connect you guys with Jordan. You can reach out to him directly. But I think anyone who does is going to be well served by what their company provides. So Jordan, thank you again. And with that, I want to introduce, let's see, we'll go to our next slide here. There we go. Steve. Steve is a new member of our team here at Employer Lawyer. Steve Glassford is somebody I've known for quite a while now. He spent a number of years at the United States Department of Labor, where he was a wage and hour auditor or investigator. And eventually he moved into a role where he was training other people at the Department of Labor how to do their work, how to understand what the federal law means, and helping business owners understand how the federal wage law works. And it's an issue that we run into all the time with small business owners. The law is certainly not common sense based. It doesn't make a lot of sense unless you get real clear training about it. And that's why Steve and I decided we should put together a free 30-minute webinar for our clients and our friends of the firm. Make sure you guys have a chance to learn about the federal wage law, how it works, what kind of pitfalls to be watching out for. And I don't think there's anyone who could do a better job at that than Steve Glassford. So I'm going to invite Steve to step in here and take over. And we look forward to sharing this information and hope it'll be helpful for all of you guys. So Steve, here we go.
Take the hot seat. Good morning. Put myself so you can see me. All right. So like Spencer was saying, that I was working with the Department of Labor for more than a decade. And so just did a lot of audits, sat down with a lot of business owners and was able to see, what are the common things, the top 5 things that people are running into, especially smaller businesses that aren't familiar with this kind of stuff.
Get it right arrow. Okay, let's just click. Let's try this. There we go.
All right, so we're talking about the Fair Labor Standards Act. This is a federal law that just says if it applies to your business, then you got to pay overtime. And sometimes it's tricky. Like, does it really, how do I know if it applies to my business? So one of the first things that we look at here, I don't know if you guys can see my mouse here, but what's the relationship? If I have a business and people work for me, are they employees or are they independent contractors? So it always comes down, the key word is the relationship. And the idea is the more I have control over these workers, the more likely they're going to be an employee. And if they're an employee, then there's extra rights and the FLSA might come into play. So just focus on that. If people are working for you, if they're coming in, because it's always the independent contractor versus the employee. And so how do you know? It gets more and more difficult these days with people working from home. And so in the old days, it was easy. Just people showed up at the factory. They're obviously employees. And if you hired somebody on a construction site, you're a general contractor, hired plumbers, you hired framers, they have their own company, they have their own van, they have their own people. Like, it's clearly a separate company, but those lines are getting more and more blurred. So the first question is or the analysis is, what is the relationship to these people that I hire? And it can be tough to say, if you want to contact us and we can talk about it another day, then that works. But the idea is the more control you have over this person, you set their schedule, you train them, you decide what time they're going to work, what time they're not going to work. The more involved you are, the more likely this is an employee and they're going to have rights in the Fair Labor Standards Act. The other thing I wanted to focus on, let's see, just roll through the slides for just a second. Just a quick stop here. We have a cartoon. I like to draw, so I figured why not turn this into a little cartoon. So the guy on the left is the boss, the guy on the right is the worker. Hey boss, I worked 45 hours last week, but didn't get overtime. Well, Johnny, you're an independent contractor. Even though I decide your pay, I train you, you wear a uniform, I schedule your hours, et cetera, et cetera. So it's just kind of a funny take and an example of the more you're involved with someone that you hire for work, the more likely it is that they're going to be an employee and subject to the Fair Labor Standards Act, maybe even other things when it comes to the IRS, which is outside of this purview, but just watch out for that. And there have been things where people will come to you and say, you've got a landscaping company, you've got a restaurant. What if you just take your workers and get a piece of paper that says they're now an LLC and one of the main people in that group, they're going to own that company, and just go back to the relationship. Nothing has changed. You still set their schedule. You still hire and fire. You still set their pay. Like, if the relationship really hasn't changed, don't fall into the trap of just, oh, there's this piece of paper that says that all my landscaping crew or all the people in my restaurant are somehow a separate business. Don't fall into that trap. Again, we can talk about this if this affects you differently, if you have questions. But the other thing, so, okay, let's just say for a second that yes, the people that work for me, I'm going to say are employees. The next thing is coverage. Does the Fair Labor Standards Act, the FLSA, am I covered by this law? Keep my eye on the time. The first thing is enterprise coverage. So when we talk about enterprise coverage, it's just looking at the business itself. And all this really means is, does the business make more than $500,000 a year? $500,000 a year plus a couple of employees or more, and you're going to be, the whole business is going to be covered by the Fair Labor Standards Act. Everybody that works there is going to be, they're going to have minimum wage. You have to worry about overtime. You have to worry about keeping accurate records, and also youth employment, like child labor violations. We talk about that a little bit. So those are the things that just to decide, because some of you guys out there might be a small business, might be wondering, do I really have to worry about overtime? Because I heard that a lot. I did so many of these investigations, some of these audits over the years, and people, usually smaller businesses, and I cheer for the small business. This is so great. You guys have something that's so cool that you're doing, a service that you're providing, a good that you're providing, but there's all these other things. So I'm always a fan of just jumping in and trying to help and make it, like Spencer said, this can be really confusing. A lot of times it just doesn't even make sense, but that's why we're here and that's why we're trying to help. I do want to make a quick plug for the small business, the very small. If this is somebody like, let's say there's an attorney, some professional or a dentist or something that only has a couple of employees, because I'm going to shift now and talk about individual coverage. Some people they go online, a business owner says, well, I make way less than $500,000. And we only got 2 people that work here plus me, but I'm an owner. Do I really have to worry about overtime? Do I really have to worry about record keeping? The answer is in some cases, yes. And it's a weird answer because let's say you do have an attorney, brand new, very small practice, makes way less than $500,000 a year, and has hired 2 people. One is at the front desk. This person's answering the phone. They're dealing with people that are over state lines. Maybe they're down in St. George, but they have a lot of clients that are from Nevada. So that person, because they're interacting electronically, a lot of cases with interstate commerce, they could be covered by the Fair Labor Standards Act, even when the business makes way less than $500,000. Interesting though, someone in the back who they hire just to clean up, they're just around, let's say it's a dentist's office, they're just preparing rooms and cleaning, but not interacting with anybody from out of state, neither electronically, they're not touching goods that are going to go out of state, anything like that. That person wouldn't be covered. So it's just odd that you'd have 2 employees both working more than 50 hours a week to keep the business going, but one would be covered individually by the Fair Labor Standards Act and one would not. So kind of a weird hypothetical. It doesn't happen a lot, but that it's just there to show you guys most businesses, even because this is all before expenses, before taxes, most businesses are going to pull in $500,000 a year. That's the nature of the business. But for those who are very small and there's not a lot of overhead, that they make less than that, it's a big watch out. It's a big look out for this. There might be people in your business that are due overtime that are subject to the Fair Labor Standards Act. All right, and just one quick slide here is that if the things on the left apply, like these people are going to be deemed or classified as employees, we don't want to misclassify. That's a lot of things. People mess that up a lot, but they're classified correctly as employees and the business makes $500,000. Or if it doesn't, these employees are engaged in interstate commerce, whether it's communicating with people over state lines or working on goods and shipping. Even if you're working with sheep or something, those are eventually going to go over state lines at some point. And so those individuals would be covered by the Fair Labor Standards Act. If that's the case, if those things are met, pretty much everybody in the business is going to have to be paid overtime. We're going to watch out for minimum wage violations. We got record keeping. And then another thing to watch out for are child labor, youth employment issues. So all those things have to be worried about. There are exemptions, things that come in and say, okay, the business is covered. Everybody in this business needs to be paid overtime, except they fit into an exemption. And what that essentially does is like a supervisor or somebody who, like the white collar, they're an accountant or something. There are jobs that are exempt from the Fair Labor Standards Act where, okay, it applies to my business, but these exemptions go in and pluck out people. They won't, you don't have to worry about overtime with those particular people. But that's another thing you got to watch out for, and we'll get to. So overtime is the big one. So if you misclassify somebody, I thought they were independent contractors, or not you, but somebody out there that does that, a business owner, they're going to have to go back and pay overtime. And a lot of times it's pretty scary because, I guess it's like $10,000 of overtime, unpaid overtime. Under the Fair Labor Standards Act, the overtime is just one part of the puzzle. So someone that should have been paid $10,000 in overtime and wasn't, that's the back wages. Now there's something additional called, under the Fair Labor Standards Act, there's something called liquidated damages, or LDs. So if someone's owed $10,000 of back wages of overtime that should have been paid and wasn't, it can fall subject to these liquidated damages. It can come out to 20 grand. So it's super important when you're classifying workers that they're classified correctly. Either they're an independent contractor or they're an employee. And then this other thing about overtime. So let's talk a little bit more. Let's see. So quick cartoon. You got the boss on the left. You got this employee on the right. So the boss says 30 hours in your first week plus 50 in your second week means 80 hours. No overtime. Ha ha ha. And then the worker's like, yeah. So a lot of people get this wrong. I don't think you guys do, but I've seen it so often. I just feel like I should repeat it. Or maybe this is something you should repeat. If you have like a manager or a foreman or something, a lot of times the owners understand this stuff, but the people that work for them that are kind of the mid-level manager might not understand this, might need a review. Right here, it says each work week stands alone. So it needs to be understood that you can pay someone weekly, you can pay someone bi-weekly, you can pay them the 1st to the 15th or 16th at the end of the month, you can pay monthly. It doesn't matter, you know, the payroll is independent, it's separate. A lot of people, a lot of business owners will fall into traps where they figure, well, you know, I pay the 1st to the 15th, and so I really, you know, I can't pay overtime because the pay period breaks up the week. You still got to pay overtime. So again, payment, payroll, that's all separate. That's independent of what I'm talking about here. When I say each work week stands alone, the employer essentially needs to pick a 7-day period, whether it's Wednesday to Tuesday. A lot of bars or a lot of restaurants will do that because a lot of the hours are on the weekend. Some businesses just like to keep it simple, Sunday to Saturday, but every business needs to pick a 7-day period. And that way they compute their overtime. It can get more complicated if you have a payroll that's the 1st to the 15th and the 16th at the end of the month. You still have to keep track of hours. You essentially have to float. And I can share something with you guys, a quick graph that shows how is that done. But I think that's a little too much for maybe we'll just do it briefly. But yeah, if we could shift over to that.
Okay, Spencer, gonna step in here real quick and see if we can share another screen real quick. And let's see.
Okay,
There we go.
this will be fast, but just to give a quick idea, if you are one of those businesses, because it's nice to run payroll the 1st, the 15th, the 16th, just because there's less payroll. But just watch out. A lot of businesses fall into this trap and say, well, you know, this week I'll pay overtime because it's pretty easy to see. But here we see the month of June, and it's represented in yellow. The first half of June, rather, the 1st to the 15th is in yellow. The previous part of May is in orange, and then the second half of June is in green. So it's broken up like this. And this is something I'll have to explain to you guys later if you run your payroll like this, just because don't really necessarily have the time for something like this, but just, you know, you still have to pay overtime in a situation like this. But I think this is a great example of payroll is one thing and calculating overtime is another, because a lot of businesses will fall into this trap of look at this first week, like, you know, part of it's in May. So I guess don't worry about those hours. And, you know, these hours in yellow that week, you know, that only comes out to 43 hours, you know, or anyway. So watch out for that. We can help you guys compute and be compliant. If you already know that, you know, fine. But this is something that a lot of employers struggle with, and that we can help you guys iron out and say, and be compliant. Show, here's the straight time hours. There's 2 ways to look at this when it comes to overtime. Anything less than 40 hours is the regular $10 an hour. Anything over 40 hours in your whatever 7-day period you elected, Wednesday to Tuesday, Sunday to Saturday, anything over 40 hours in that particular 7-day period is going to be time and a half, 15. So if someone's at $10 an hour for the first 40, 15 for everything thereafter, after 40. I like to think of this sometimes because these can get complicated. You got other overtime is calculated on a lot of things that you'd be surprised at. Some people on a construction site, maybe they're paid a piece rate. They're installing drywall or they're painting. You know, how do I pay overtime when it comes to piece rate, when it comes to day rates? You know, there's so many different ways to pay people other than hourly. And so how do I do? And so that's something we can help you guys with. But essentially, what I like to do is just do the straight time earnings first. So here are my straight time earnings, and everything in yellow, and it's right here. So that way I can calculate that, boom. And then what about the halftime? So instead of saying $10 an hour for the first 40 hours and 15 for everything after 40, we're saying $10 an hour for every hour. We're pretending like there is no overtime law in this country. And then we stop and say, okay, that's paid. Now let's take their regular rate of $10 an hour, and then anything over 40 we'll cut in half and call it the halftime. So that's what this is. Again, not enough time to really dive into this, but I did want to at least put it on the radar that however you pay, whether you pay people by the hour, whether it's a piece rate, whether it's a day rate, that's fine. And in most cases, there needs to be overtime, even in some cases where there's bonuses, which really drives employers crazy that, wow, this is what Spencer referenced. How in the world? Like, that's not a bonus, because, you know, if you do this, I will pay you extra. If you assemble so many widgets, I'll give you, like, that can inflate the regular rate. That can inflate the overtime. Not a lot, but it still has to be accounted for. And that's something we can talk about. But yeah, this was just a cute little thing I put together that it can be complicated. It can be crazy, but just if you take the time to walk through it, and that way, if you are audited, if someone does show up, an investigator with their badge and says, we're with the United States Department of Labor, the Wage and Hour Division, we want to look and see if you're paying overtime, essentially, There are a lot of directed cases that those seem to be going up. I left the agency recently, and it seems more and more they're doing these directed cases where everybody in your company is happy, but that, somebody from DC, says, well, we want to know more what's going on in Utah, and specifically in daycare or landscaping or construction or hospital, whatever they choose. So it's nice just to take a chance either with us or just by yourself to go through and just say, are we doing this right? Can we at least explain what we're doing? There are so many cases where I show up and the employer is like, I don't really know. I hired someone and they quit and I don't even know. I just let the machine do it. That's not great. That can lead to problems. So I think I'm gonna ask Spencer to help me go back to the presentation.
All right, let me just switch it right back here real quick. And we're gonna go to, let's see, right there. There we go.
Thank you. So big one, each work week has to stand alone. It is tempting to fall into the trap of, 30 hours for this worker in the first week, 50 in the second, we pay every 2 weeks, bada bing, bada boom, no overtime. And that's not true. That the second week would have 10 hours of overtime. The first one wouldn't have any. All right, so I showed that graph to say, even if the pay period is the 1st, the 15th, or the 16th at the end of the month, you still got to pay overtime. So many people trip up all that, and they'll pay the middle week that's unbroken, but the initial week and the last week they'll say, well, it didn't fit in the payroll, so I just didn't pay overtime. It's not good, because then you'd have to go back and pay overtime to those people, essentially the half time, because you've already paid them the regular time. But it can add up, and it can be over. These investigations or audits will go back 2 years, in some cases 3, if the government feels like it was particularly egregious that someone was trying to hide. So that's kind of rare, but even 2 years with multiple employees, and it's a lot. So it's kind of a headache, but it's nice to iron out now. And I mean, a lot of people aren't investigated. There are a lot of places that don't, but it just seems like they're doing more and more directed cases. Typically, they'll rely on complaints. Somebody will call in and say, I don't feel like I'm getting paid overtime. I don't think my hours are accurate and all this stuff. And so they will investigate those claims. But most people are pretty happy with what they do, and they don't want to call the government. But even then, the number of directed cases seem to be going up. All right, one more cartoon here. And each one of these cartoons represents one of the 5 that I'm addressing. All right, so we have the worker talking. Man, it's been a crazy last week on the construction site. Tons of overtime. And so here's another fallacy that a lot of people, another trap for employers potentially. Oh, I pay you guys each a salary, so I don't need to worry about overtime. This pops up so much that employers, they never even realize what they're doing. They figure this is somebody who is, they're in charge on the construction side. They're one of the main leaders in the restaurant or whatever business it is, but they don't meet the requirements of an exempt employee, someone who legally can be separated out from the Fair Labor Standards Act. They don't formally don't supervise anybody. They're just one of the main women on the crew or whatever business it is, or one of the main guys. So a lot of times the employer will say, I'll just pay you a salary. I won't have to worry about, that way we don't have to worry about hours. You can basically run this business while I'm gone. But another big trap that I saw year after year after year. So here's the little slide for it. Paying someone a salary does not remove the obligation to pay overtime. It can, but it's very strict. The requirements that have to be met. This is something we can go over. If you guys are in this situation, you're thinking, I got a salary person. I don't know. I don't even know where to look to see if they meet these specific exemptions. And we can show you where to find this in the Code of Federal Regulation. And then the agency itself has their operator's handbook that we can look at. But yeah, so I just tell people that the exemptions, they have to easily fit into these exemptions. And then if that's the case, then great, we don't have to pay them overtime. But don't use salary. Salary isn't enough to say, well, I paid this person in often cases a very generous salary, and that way, for that reason, they don't need overtime. Well, those are one of the biggest heartaches, the saddest ones when I do these investigations, these audits, when I was working with the government, is that you have a small business. They were paying someone a very handsome salary, maybe in some cases 2 people, and they were misclassified. They thought, well, I paid them a salary. I figured I didn't have to worry about overtime, but they didn't fit into those exemptions, and they did have to go back and pay not only the overtime that was due, but then the double damages, those liquidated damages, which are, those are bad. I mean, and it's under the statute that can be there. So this is something we just want to ring the warning bell. Just watch out for that. The other ones are smaller. little grab bag thing. Not a lot of issues with minimum wage. Usually if someone, the only time I really saw this was when somebody you had a worker, bless their heart, and they wrecked a truck or they caused a lot of damage, $10,000 worth of damage. And they come to you like, well, where's my $600, my last paycheck? And it just seems like, why would I pay you $600 if you cost me thousands of dollars of damage for our vehicle or something else, or you left something outside and it got stolen or ruined? Under the Fair Labor Standards Act, you still have to, this could pop up as a last paycheck issue. The thing is with these, and then the other one is retaliation. Oh, time cards. Please do time cards. It'll save you. It's a headache. It's so hard to track people down, but to the best you can, whether you have a supervisor, just try whatever. There's apps on your phone. There's different things you can do, but please do time cards. These last two of retaliation and minimum wage, just people will call and say, well, they retaliated against me. I asked them about my hours and they cut my hours, they fired me, or, a last paycheck. So some worker caused all these problems, and rightly so, the employer says, I don't want you working for me anymore because you're just causing problems among the team. You're costing me tens of thousands of dollars. It's fine to let that person go, but just pay the last paycheck. Don't do anything cute. Send their last paycheck within $900 worth of pennies. Somebody did that in Georgia recently, and it's sparked an investigation. And what usually happens with these little issues is that an investigator will come, they'll do the audit for the whole 2 years for all the people in the company. And more issues are found. A misclassification of salaried workers, misclassification of independent people thought they were independent contractors. The investigator is going to do they're going to do interviews and just a few to see what's going on. They're going to look at records, but a lot of these little things will just blow up. That one case that I was telling you about, with the employer thought it'd be cute just to deliver $900 worth of pennies and dump it on the guy's driveway. Well, they deemed that as retaliation, did a subsequent audit and found like $24,000 worth of violations. So that's an extreme example. It's not something you guys are doing or would think about doing, but just, and I also don't want you to think like, I got to walk around on eggshells, but just be careful when you react or when you have somebody like that. Pay the last paycheck. Don't retaliate, and it'll be worth it. So that's the end of the presentation. Are there any questions? Does anybody have anything there?
Let's do this. I'm going to turn off our screen share so we can see. All right, I'm going to turn on our chat if we got any. Let's see, where's our chat feature? Okay. All right, so we got Jeremiah's got a question there for you. Want to go ahead and address that one?
Let me just look it over here. Does that mean salary people get their pay reduced if they work less than 40 hours? Typically with salary, they're going to get the same. And that's a problem that some people will run into, is that, oh, they're on a salary, let's change it. If someone's on a salary, just keep the salary going. But I think it's important to determine, is this person exempt from overtime? If they are legitimately into that exemption, then you just pay them salary regardless of the hours they work that week. If they don't fit into that exemption or any exemption, and they're being paid a salary, just essentially you have to pay the halftime on that salary. We can show you how to do that, but that's a very good question.
Yeah, thank you, Jeremiah. Okay, Julia asked, where do we find a definition of the exempt versus non-exempt?
I think just contact us and we can just briefly just give you the information. We are running a program this summer where if you want to do a 1 hour, just sit down, here's my records, and this can be through Zoom. We don't have to be there physically necessarily, but here's our records. Here's what we do. Just a brief snapshot for 1 hour. What were we saying?
Yeah, $250 for an hour. So we're calling it, and one of the reasons we wanted to present this at the end of the webinar before we wrap up here is we've had a lot of our small business clients being singled out for audits by the U.S. Department of Labor. And it's really a big challenge where the Department of Labor comes in and finds that there's some errors in how the employees are being paid. And so we wanted to suggest to everyone on this call, and you're welcome to pass this word around as well, that we can do a 1 hour audit. We can take a look at the documents that we need to see or that an investigator would be looking at to see if there are any problems in how your employees are classified as exempt or non-exempt, whether they're being paid correctly for the hours that they're working, with the goal of identifying any problems now and getting those fixed before a actual investigator from the Department of Labor comes. So Steve isn't there anymore, but we can get the value that Steve can offer to you guys by doing an hour review of your pay records. So if that is something that's interesting to any of you, feel free to just reach out to Steve at employer-lawyer.com. You can reach out to me. You've all got my email address. And let us know if we can schedule time over Zoom or in person, whatever works for you, to take a look at those records and identify if there are any problems that you need to start fixing now before the Department of Labor comes knocking. So I hope that's helpful. Ben and Julia, let's see, let's squeeze in one more question here. Ben asks, all of our time cards are kept through our POS and I don't print them off. Should I be printing those with each pay period? Not a need at all. As long as you've got records of them and you're keeping them and they're secure, that's fantastic. I will tell you though, we run into issues sometimes where businesses are trying to find their old time records when an audit is being done, and they realize that they don't have access to them anymore because they've switched providers. That's one of the things that we'll be looking at when we come to do an audit, to make sure that we're able to access all that information that would be needed in the event of a real audit. And then again, hopefully identifying any problems so we can get those fixed before the big day comes. So thank you everyone for being a part of the webinar here. We will be taking, this has been recorded, and so we can share a copy of it with you for your teams or anyone else that may need to see it. And we'll make sure we get this out to anyone who lets us know you'd like a copy of the webinar. And we'll be doing another one at the end of the next quarter. So keep an eye out for the end of September. We'll send a link around, and we may even do something before then. We'll make sure we let you guys know. So thanks everyone for being a part of the webinar today, and have a fantastic rest of your day.
Thank you.
Take care, everyone.